Hang Seng is seeing a big cut right now, 0.6% gone there.
Near-term consolidation is likely until the point that 17,863, which is the high from yesterday, gets taken out.
The respect to windfall tax revision is that it has been increased on crude oil production from 0 to 6,400 rupees per ton.
The Nifty is absolutely flat, down just about 9 odd points.
And there is the saying, a rising tide lifts all boats. I think that's really what has happened in the last couple of weeks.
You have to always look at the portfolio loss experience over longer horizon.
Now we're just down about 0.1% on the Nifty and the sensex. Mid-caps yet again are holding up.
The trend of new demat account openings is slowing down.
The company has gone ahead and formally announced to the exchanges that they've made changes in the delivery partner payout structure.
The petitioners went on to even point out that this matter has been pending for 5 months.
So 31,258 on the mid-cap index. The Nifty is virtually at the day's low.
That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me are Surbhi Upadhyay and Nigel D'Souza in the studio, and we've got Mangalam Malu in the newsroom. Afternoon, Surbhi, Nigel and Mangalam, and a late afternoon decline takes the Nifty down to levels of 17,600. Till about 1 p.m., the markets were trading in a very tight band of just about 50 points. Suddenly, you had that sell-off, and the Nifty went below 17,600, and now it's trying to find its feet. Mid-caps too, which were holding fort in the green, suddenly took a leg down. The mid-cap index is now flat. It's given up all its morning gains, and the advanced decline ratio too has completely evened out. You've got one stock in the green for one in the red. The problem is IT. So if the sell-off over the last couple of days wasn't enough, IT has taken another leg lower. The Nifty IT index is down 1.7%. with names like HCL Tech taking a bit of a blow ahead of its numbers tomorrow post-market hours. HCL Tech is down close to about 2%. So since there is some nervousness going into numbers, I just want to put up on the table that since the beginning of the earnings season, that's pre-TCS numbers, HCL Tech and TCS have both fallen about 5%, while Infosys has seen a fall of close to about 13.5%. So the sense is that if there is a moderate miss on expectations, something like what TCS had delivered, then perhaps it's already in the price, because since the beginning of the earnings season, the stock has already fallen 5%, similar to TCS. But if we have a miss as bad as in the case of Infosys, then there could be further, leg down. And of course, if there is a positive surprise, given the levels that we are at and the sell-off, there could be case for a bounce back. Divi's Laboratories is one stock which stands out on the way up. What a move on the stock. 2.5% up today, 5% this week, 18.5% for the month. So there is this clear heightened interest in pharmaceutical names, and buying is emerging in many of them today.
But before Nigel, I toss it to you, I just want to ask you for what levels you're looking at, because the only thing that I noticed in the market that really caught my eye was when we breached yesterday's lows and the Monday low as well. But from there's been a bit of a bounce, though as Reema's pointing out, IT is still under pressure. So in terms of levels and trends, what's on your radar today?
Well, it's very, very important that the Nifty holds on to that 17,500 to 17,550. That's why every time we are seeing, the Nifty go closer to around 17,570 odd, which is close to today's low, you're seeing a bit of a bounce. We saw a couple of days back as well. But that's a crucial level, 17,550 to around 17,500 odd. We seem to be in a bit of a consolidation because we've got big numbers that are coming later this week. That's ICICI Bank as well as Reliance Industries. So for the time being, you want Nifty to hold on to the lower band and hopefully results turn in our favor. Now, the big outperformer has been the Nifty Bank, and that's finding resistance at around 42,500 odd. Yesterday, we went to bank to that mark, and in fact, we saw a bit of a U-turn today as well. Just looking at the options data, there is resistance that's coming in at that level. Now, the 17,700 call, just pull that up. Just take a look at the open interest built up. Close to 2 crore shares odd. I've not seen that in a very, very long while. Today as well, more than 50 lakh shares getting added out there, and close to 2 crore shares in terms of open interest, giving you a sense that the bears, they believe that 17,800 odd is not going to cross. At least that's the way they're positioned. So let's get straight to the levels then. Support levels, as I told you, 17,500, 17,550. At lower levels, you're looking at the 50 as well as the 200 DMA. On the Nifty Bank, till it holds on to that 100 DMA, the bulls will feel they are with a chance, because the Nifty IT index is not performing. But as long as the Nifty Bank can hold on to that level, which is close to around 400 points away from these levels, then you'll feel that you're in with a chance, Surbhi. But you're watching a whole host of stocks, I believe.
I am, because I was looking at the mid-cap market. Yesterday, at least the mid-cap market was really vibrant and buoyant, and that's missing today. So to start off with, let's just pull up the market breadth, because you have sort of a situation where it's even Steven right now. The mid-cap index is not showing any kind of flare. We'll pull up the small-cap index as well. Advanced decline ratio is absolutely in step, 1418 advances, 1446 declining. The lines are now crisscrossing with the bears kind of taking over. That's small cap index. So no overarching flare in the mid cap market, but you look closely enough, you'll always find pockets of action. And today for me, the stocks that really caught my eye were all the rice exporters. Been talking to Manisha about this as well. This global deficit, a 20-year high deficit that's playing out in the global markets, and that means that Indian exporters will really benefit, because for us production is pretty much in sync, and that is the reaction that stock prices are showcasing for the time being. But Mangalam, very range bound. What trends are you noticing?
Extremely range bound. You know, for most part of the day, the Nifty was stuck to 17,650 as if, you know, they had Pidilite holding all of it. But you know, a lot of the straddle writers, which is basically call and put writers, were holding on to 17,650 as their important fulcrum. And if you just take a look at the combined premium for both these options, you would see for about 100 rupees, the street was bracing itself for this range of 17,600 to 17,700. And should 17,600 go lower, we were expecting some support at the 200-day moving average, and that's exactly what played out. You know, the couple of things that we'll be watching out for now as we move towards close is how the mid-cap index performs, mainly because it's also the weekly options expiry of the mid-cap index. And secondly, a lot of individual stocks doing extremely well. You guys spoke about a few of them, but right now I'm noticing all the oil and gas companies doing extremely well. All the oil marketing companies in particular, BPCL, IOC, both of them at the high point of trade, joined by HPCL, so that's doing well. And a couple of other players as well, from the non-pharmaceutical end of things, doing extremely well, and some of them belong to the MDF space. So something like Green Panel Industries has been a big mover. We have, Rushil Decor, another one which is up around 11%. These belong to the home building and MDF space. And of course, we are seeing a big move in a couple of these pharmaceutical names too. Gland Pharma up 16%. So we have a bunch of stocks on our radar. How should you position yourself in the last hour of trade? As always, we have Mitesh joining in. Mitesh, very range-bound trade, but still holding around that 17,600 mark despite a dip from the top. Do you think this should be bought or stay away?
Good afternoon, Mangalam. So, you know, we've been advocating buying out of the dip, and I think Nigel at the beginning of the show was highlighting the importance of 17,550. That being the support area, I think 17,580, 570 is your buying zone. You got a low around there. I think that's the range to buy into. Keep the stop below 17,540. And the minimum bounce back target should be about 17,650, 660. But I think eventually we should head towards 17,710 and then 17,820. So it's a market which has come out of an uptrend on an hourly and the 2-hourly charts on an intraday immediate basis and is consolidating. But since the broader trend is on the upside, the idea is to buy around the key support level, which I would say is 17,550. So about 30, 35 points higher than that would be a comfortable entry point, and one can keep a 15, 20 point stop loss below the 17,550 support level. Having said that, the stock calls are also on the buy side. I have a buy on HPCL. Stock has given a good price volume reversal and a breakout today. Recommend to buy here with a stop below 232 for targets of 250. And pharma is clearly a pack which we've been advocating for the last few days. Good breakouts happening over there. Today, DVs is showing continuation pattern. So buy that with a stop at 33.10 for targets of 34.20.
Those were some trading ideas. Mitesh, we'll come back to you. For now, let's go across to Sonia. She's waiting by to tell us why Atul Auto is surging in trade. Sonia.
Well, thanks a lot for that. So, you know, I'm tracking Atul Auto because the stock is at a fresh 52-week high this afternoon. In fact, not just today, the stock has had a dream run in the last 1 year. If you track the stock, it's up 50% in 2023 already, and the stock is up 60% from the lows we saw in December of last year. Now, what's the positive trigger here? So if you notice, a lot of these companies that are going big in the electric vehicle space are gaining quite a bit of traction. So for Atul Auto as well, it's made a foray into the electric three-wheeler segment. They're strengthening their portfolio in the electric three-wheeler space. They also intend to export their electric three-wheelers, and they have put up a plant for that. They're looking to target various geographies over the next couple of years. They've also inked a pact with Honda for swapping battery technology. It is still under development, But these are a couple of positive triggers for Atul Auto. Export market is a big opportunity for them. And the company says that the Indian electric three-wheeler market is expected to grow over 15% compounded between, calendar year 2023 and 2028. So they're making big investments here and they're growing that electric three-wheeler business in a big way. So that's a trigger perhaps and the reason for which the stock has been doing very well.
Got it. Thanks a lot for that, Sonia. It's almost 1,000 crore market capitalization now at around 950 crores odd. Gurmeet Chadha, Managing Partner and Chief Investment Officer at Complete Circle, joins us on the show. Hi, Gurmeet. Well, you've normally been enjoying the tractor move, but what do you make of this three-wheeler? Atul Auto from nowhere, it was languishing for very, very long, not able to scale up volumes as well. But this EV trigger has come about, the stock has got pushed up, a couple of big investors coming in as well. Prefer the tractor or will you look at this one?
It's it's on our radar, especially after the brokerage update came in, and we've been tracking the subsidiary, which is the Atul Green Tech as well. And as Sonia made that point that they have plans on exports. They have launched e-rickshaw recently, which apparently has got a good response also. And now they're wanting to get into the L5, which is both cargo as well as the passenger segment. My only thing is, EV forays, news can drive you for a day or for a week. But for it to pan out, it will take time. So you've got, just basis the news, you should not be invested. One company which we like in this space, which has shown steady improvement, is TVS, which is including scooters, mopeds, motorcycles as well as three-wheelers. And if you see, their margins have steadily improved. The stock almost made a 52-week high this week, despite whatever we have seen in the market. Also, if you see their IQ, last quarter, the wholesales were almost 29,000 units. They want to double this. And if you go by the government data, which comes on Vahan, on EV market share, they're almost now at 15%. Plus, there are new launches coming in all segments. They have several good product pipeline. There is a launch of Raider, which is there. There is Ronin. There are a few good launches there. And a bit of a rural play also. If the Rabi crop is good and we are considering we have 7 state elections this year, you will see some government push also on the rural side of the economy. So that's something I'm looking at more closely, and Atul obviously is on the watch.
Right. Gurmeet, now that you've spoken about the auto space, let's talk about the alcohol space and the non-alcoholic beverages space as well. One is because of the heat wave. Secondly, we got Heineken's first quarter calendar year update, where they said that in India, the revenue grew by high single digit organically. It was a mix of both volume and price-led growth. But importantly, the premium portfolio for them did extremely well. It was led by Kingfisher Ultra as well as Heineken Silver. That's point number one. Secondly, Som Distilleries, another beer stock, up almost 7% as they started production of their facility in Karnataka, enhanced capacity in Karnataka. So that's on the beer side. And secondly, Varun Beverages. After the large trade yesterday, what are your thoughts on this space? I mean, is the heat wave enough reason for people to consume more, and is that in the price?
These calls at best, Manglam are tactical. So if you see, for example, United Spirits also, as I said, we are into a year we have 7 state elections. There could be regulatory interventions. We saw a liquor ban in Bihar some time back. There have been fresh talks in MP on curtailing on new licensing and retail outlets. So I would tend to avoid, despite the change of promoter, let's say in United Spirits, launches of more premium brand in the whiskey segment, and so despite all of that, plans to cut down debt. Somehow the stock price has not really some of the other quarter has disappointed. I think a better play in my view is linking it to the housing revival, along with enhanced demand for summers, which is a consumer durable segment if you want to play the heat wave. So if you see last 3 to 5 years, both Symphony and Voltas haven't done well. Symphony largely because of the bad acquisition, misallocation of capital in 2017. Voltas also struggling with both the Beko JV as well as the EMPS, which is their product division. But this is one segment, air cooling, where the penetration level is low. Affordability is picking up. Urban side of the economy is definitely doing well. We've seen that with hotel occupancy rates. We've seen that with premium real estate sales. We've seen that with premium car sales, right? So that one segment, I think, which is more structural. You might get a bit of a fillip because of the cyclicality of the business. But this is something which, in my view, is more structural with a 3 to 5 year leg room.
Do stay on. Gurmeet, need to slip into a mandatory commercial break right now. But as we do that, here is a quick programming note. Unstable market conditions have led to lower demat account openings in the month of March, but the F&O segment has seen a retail investor frenzy. Data analysis and a very interesting chat with Balasubramaniam, chairman of AMFI, coming up at 3:30 p.m. So stay tuned.
Welcome back. Here with us on Closing Bell, and the market continues to battle pressure. Before we go on and talk about other trends, let's look at an exclusive story. We're learning from sources that the IT department has issued notices to several banks on their dealings with insurers. It seems that the manner in which commissions are being paid out, perhaps that has something to do with it. Santhya is here with more details. What are you picking up, Santhya?
So, Surbhi, these notices are actually a result of an ongoing probe. Notices are sent, as you rightly mentioned, to some private banks. Notices are sent by the IT department. And this is a result of an ongoing probe where the IT department is actually investigating the allegation of, overriding commissions which are being paid by the insurers. And it's not just IT department which is in the picture, Surbhi. In fact, GST department is also there. The DGGI department, the department is also sent a show cause notice to a bank. If we talk about the overall scenario here, if we talk about both these departments, there are 23 insurance firms which are under the scanner and 500 entities which are associated with these with the parties here. And talking about more details, IT department and GST department, both of them are inquiring the matter. And as of now, notices have been sent to private banks by IT department and a show cause notice to one of the banks by GST department. Sorry.
All right, got that. Thanks for getting us the story there, Santhya. We'll keep an eye out on developments. Okay, so we're talking about the market being downbeat overall. The one sector that continues to dominate the action really is pharma. And even today, quite a few of these names, Gland Pharma is up almost, make the gain now 15%. There's a huge spike on Gland Pharma that's underway. That's a pharma index, but individual, stocks within that. There's a Sequence Scientific, there's Piramal Pharma, which is up about 8% as well. So sporadic moves in the pharma space, and most of them on the upside. The pharma index this month is up almost, I think, 5.5%. One of the best performing parts of the market.
Yeah, I think we should get Vivek actually, because we have a story that's coming in there, and just flashing for you on the screen, because sources say that Birlasoft could be the stock in focus. Invacare dues could possibly be recovered. And the company is in advanced negotiations with Invacare for recovering dues. We have a couple of numbers out here. We'll wait for Vivek to join us. But Vivek says that, just to give a bit of a recap, I think the company provided 150 crores towards Invacare dues, which now some part of that could get recovered. Vivek joins us. I think he's with us. Vivek, go ahead. Fill us in with what you're picking up.
Well, absolutely right. This could spell significant relief as far as Birlasoft is concerned. What we understand from our sources is that the company is in advanced negotiations with Invacare for recovering its dues. Now, remember, Invacare had filed for bankruptcy, and overnight the company had lost one of its top clients, a client that contributed almost 3 to 4% of its revenue. Now, what we understand is that there are two clear, dues that will come in. Number one, the company could recover some of the unpaid pre-bankruptcy dues from Invacare, and we also understand that there could be a one-time settlement amount that would come into Birlasoft. Now, these are dues given the fact that the company continues to provide services as, it's still a lights-on service provider at this point of time. Now, remember the 10-year deal that Invacare had with Birlasoft was contributing, it was a 10-year deal worth almost $240 billion and, 3 to 4% of the total top line. And in Q3 FY23, Birlasoft had gone ahead and provided almost 150 crore towards the dues that, it was owed from Invacare. So it could spell significant relief. We obviously reached out to the management of Birlasoft. What they're saying is that the matter is currently sub judice. We have no further comments to say on the name, but it will be one important development to track as far as Birlasoft is concerned.
Okay, all right. Some bit of relief that's coming there. That's where we saw a bit of a relief on the stock price as well from the low point. Gurmeet, do you track this one? Birlasoft, it had a dream run, I recall. You know, when they were talking about bigger numbers, I think $1 billion in terms of revenues by 2025 or 2026 odd. Then you had a couple of resignations at the top, and the stock is nearly half from the peak. What's your view on the IT pack and Birlasoft, if at all?
So Nigel, Birlasoft is not in our coverage, but I would be keenly awaiting HCL commentary. I think anything, even the environment is such that even a flattish quarter with maybe a small growth, maybe 0.5% kind of a CC growth would be so, because that basically we want to see whether it's something more structural or Infosys was more one-off due to, you know, clampdowns in deal and some delay. Also, in case of Infosys, North America is more than 40%. BFSI again is pretty good, and the digital revenues, which basically include, you know, digital transformation, cloud migration, vendor consolidation, is a significant chunk. HCL is more diversified with ERD, the product and platform business. I think would be keen to watch out for since the acquisition. So I think, and the commentary is more important. I mean, in my view, and that could probably maybe give some relief. So I'm more interested there. And we have some niche plays which we'll be keenly monitoring, especially in the auto ERD eventually, which with the likes of KPIT and Tata Elxsi, which we are monitoring very closely.
Okay, well, that's the news on Birlasoft coming through. Gurmeet, hi, good afternoon. Just to go back to the pharma move as well, want to get your thoughts on Gland Pharma in case you track it. Piramal has some news around it as well, but of late, I mean, this has become the hottest part of the market. What stocks do you have your eyes on?
So, Subi, value migration, since we discussed that yesterday, is also, if you see, I think the trigger was the March export data, which showed Divi's doing 92 million extra Molnupiravir. Laurus was almost 45, 46 million. Even some of the smaller ones like Newland and Syngene, etc., showed good traction, which basically said that, you know, probably the worst in custom synthesis business, because the stock saw what I think Piramal was down about 70% from demerger. Divi's corrected 40% plus. We saw Laurus coming down from 700 levels to sub 300. So there was a very healthy correction. So some of it is that. Some of it is, as I said, value migration. I think I would still be focused on branded generics. Looks at the like of, you know, the Cipla, etc. of the world. There's a new IPO coming next week, which is Mankind, which is in our radar. We will, but I'm more structurally bullish on this CDMO space. I think this I've been saying this earlier, this is a very long-term opportunity, and some of our companies are really building capacities for next 2 years. So you'll see a lot of suppliers getting freezed with innovator and MNC pharma companies, and then getting a 5-7 year runway on a lot of molecules which are in stage 3 right now.
All right, Gurmeet, thanks a lot for joining in and giving us all those details. Some news flashing on your screens with regards to Zydus Life. The stock mildly higher in today's trading session, but a lot more pharmaceutical stocks moving a lot higher as well. With that, let's move on. We have Mithun Aswath, who's the managing partner at Kiva Advisors, joining us now. Mithun, thank you so much for joining in. I mean, we have seen a bit of rebound from the lows that we hit a couple of weeks ago, and from there itself, you know, a lot of value buying, so to say, has emerged. What are your thoughts on the way forward for the market? And in that, I see PB Fintech as one of your recent preferred picks. Can you give us the rationale behind that?
Yeah, good afternoon, Mangala. Yeah, I think, you know, we've seen the market kind of rebound from some lows that we hit a couple of weeks back. Also, not only on value buying, but also we saw that, you know, the RBI did not move on interest rates. And that also may be a signal that interest rates, peak interest rates are behind us. And that also provided an impetus to the markets to move higher. We actually see that even US inflation may have peaked. The data in March also came in at about 5%, which is way off the levels which we saw maybe June last year over 9%. So even the Fed could be towards the end of its rate hiking cycle. They may have one more rate hike to go, but they may not do that as well, considering the banking issues happening in the US. So we are quite relatively positive on India. I think in the first few months of the current year, you saw flows move to China because of the undervaluation. I think that has corrected, and I think from incremental flows may gravitate towards India, especially the emerging market flows could come back to India because I think we are well positioned right now.
So if incremental funds are coming to India, what are the attractive pockets now where valuations are still reasonable?
So I think Mangalam just spoke about one of the ideas that we are quite positive on is PB Fintech. This is basically a company which runs the marketplace called Policy Bazaar as well as Paisa Bazaar. It's way off the highs from the IPO and post-IPO highs. I think it's half from there. And its business, I think it definitely has legroom to grow because the insurance penetration, both general and life, is quite low in India. And with the whole digitization and the growth there, you will see this company report faster than industry growth. Even in the current year, you've seen the premiums grow at over 50%. And I think the last 4 or 5 years, CAGR is also in that range. So they are at an annual run rate of close to 12,000 crores. And also their renewal premium has crossed 300 crores in the last quarter. And the company is projected to grow that to around 450 crores in the next fiscal. And so this is one of those companies in the new age space where, the path to profitability is a lot more visible. And the companies indicated that they would be, profitable on the PAT level in FY24. And by FY27, they're targeting a profit of 1,000 crores, primarily led by better profitability as well as the ESOP charges coming down. So at around 25 times, FY27 earnings, the stock doesn't look too bad at the current prices, considering they have about 5,000 crores of cash on the balance sheet as well. So this is one which we think structurally makes sense, could compound at 25-30% over the next 3 to 5 years. So that's something that we like.
Okay. Mithun, hi, good afternoon. Wanted to get your thoughts on the commodity side of the market because the cues that we're getting in over there have been, shall I say, a little more inspiring at least than other pockets. You've got the Chinese data, which is completely fired up. Commodities, whether it's metals, even agricultural commodities, mostly on the higher side. Crude projections, for oil prices also on the higher side. In general, is there, is there any play here beyond day-to-day sentiment? Are you looking at either, let's say, metals, ferrous, non-ferrous, anything on the oil and gas side, or even beyond, to make its way to the portfolio?
Yeah, I think one position that we've continued to hold and are quite positive are on Tata Steel and its subsidiaries. So Tata Steel is actually embarking on consolidating a lot of its listed companies into Tata Steel. And a lot of the Tata Steel subsidiaries trade at about 10 to 14% discount based on the merger ratio into Tata Steel. So we are quite relatively positive on Tata Steel from the current levels. And we think the route to play this is through the subsidiaries, be it Tata Steel, Long Products or Tata Metallics, because both of them trade at a discount based on the merger ratio. Considering, the improvement in the Chinese economy expected, I think the GDP growth came at 4.5%. And we do think, that can provide some impetus for global growth. And domestically as well, I think the whole spend on infrastructure will help, companies like Tata Steel continue to grow. And they have large expansion, which will come into fruition in the FY24 as well. So there is some volume growth and improvement in profitability that we see. And the best way to play it is through the subsidiaries since they trade at a discount. Like I mentioned.
All right. Hi, Mithun. Good afternoon. Good to speak to you. Mithun, from the IT pact, Explio Solutions, I think that's the one that you've been holding for a while. Continue to hold that one, and given the kind of volatility, or given the kind of, not volatility actually, downtick that we have seen in the IT stocks, are you looking to get in?
Nigel, I think, there has been volatility primarily because you saw Infosys earnings, which was a big miss. And, the financial sector in the US is also mixed, actually. The smaller banks are seeing pain, while the larger banks are reporting record profitability. So it remains to be seen whether, Infosys is trying to be very conservative, and through the year, they actually increase guidance. So we actually think maybe we're coming close to a bottom, maybe in the large cap tech stocks. We would only see, further downside from here if there is a complete recession or something like that, blown out recession happens in the US. Otherwise, we actually think this could be a buying opportunity in some of those large ones. But, our focus has been on the mid-cap IT stocks like Explio. And Explio, you would have seen recently the merger go through with its unlisted companies in India. So it will become a much larger entity. I think the record date for the same is 24th April. So post that, you will see a company with revenues in the order of 1,000 crores and profitability north of 100 crores. And this company is likely to, targeted to double revenues and profits over the next 3 to 4 years. So I think it's well positioned.
All right. Yeah, we get that it's well positioned. Just wanted your thoughts on the building material space, because in the past you've been very bullish on Cera Sanitary Ware. I just wanted to understand if you're looking at spaces outside of that as well, because today we're seeing a big move in all these MDF plays, plywood plays, Green Palette Industries, Rushil Decor, all of them doing extremely well. So are you betting on, say, something like paints or plywood?
Yeah, Mangalam, I think, in terms of our portfolio there, we do have some exposures to paints as well, through companies actually like even Grasim, which gives you exposure to both paints as well as cement. Primarily currently now it's a holding company of Ultratech, but they are going to enter the paints business in a large way, and their operations will start in the Q4 of FY24. So that's one way to play this space through Grasim, because you do get Ultratech plus the optionality of the paints business. So that's something that we do hold and quite positive on. Apart from that, on the cements business, we tactically also added into Ambuja in the recent decline around the 340, 350 levels. Where we do think valuations look reasonably good on Ambuja's side.
Got that. All right. Very quickly, Mithun, you said Explio you'll continue to hold on to, but from the large caps, if you'll have to look at it, what's the pecking order out there before we wind down?
Currently most portfolios we own TCS as our large cap holding. But after this correction, we are evaluating Infosys as well, because at the current price, it is looking quite attractive, considering its historical band of ratios. So we are monitoring it. We've still not initiated anything, but that is something that we are watching closely.
Well, appreciate you stopping by, Mithun, discussing all those themes with us. We look forward to having a chat with you. Wishing you a good second half of the day. Well, on that note, though, we'll have to slip into a short break. But as always, Nimesh is waiting for us on the other side. He'll tell us what he's picking up in dealing rooms in our special segment, D Street Chatter. Our technical experts as well will be back with us. You stay with us.
Well, the mid-cap index just a little above the green line. You're watching us here live on Closing Bell. We come to you live from the CNBC-TV18 Motilal Oswal newsroom. And this is the time where we get you our favorite dealing room segment, D Street Chatter with Nimesh. Nimesh is here with us. Nimesh, the screen suggests that it's a comatose, dull market, but is there more than what meets the eye?
It looks like, Mangalam, from a dealing room point of view, there is a lot of action. And I'm seeing a lot of action because the volumes are going to be higher side. There are basket selling as well at some large FI desks. And equally, there is buying as well in some select large cap names, including Reliance, in cash market traders. So that explains the kind of mood which is there. screen may suggest something else, but the action behind is really different, and there's a lot of action as far as flows are concerned. So that's the overall feedback. I guess from today there is no direction from a particular sector. We've been seeing for the last many days one sector having leadership. That seems to be missing into the trade. Of course, some bit of buying continues in the pharma names, but broadly it's been like more of individual names today. And because of this basket selling, you're seeing both positives as well as negatives within the large cap names. I guess Nifty seems to be still in that range between 17,400 on the downside and 17,800, 17,900 seems to be a strong resistance on the upside. So earnings are going to be important, and that's going to drive the markets as well. But if you ask me from a flow point of view today, it's an actionable day with a lot of buying and selling happening in the large cap names.
All right, a lot of buying and selling happening. Are you gathering any of those in your individual stocks? What do you have?
Yes, so in terms of individual names, the first stock on my list today is Bajaj Electricals. That stock is up 3% after a large block, nearly 2% equity change hands today. And I believe one of the long only fund who owns a large chunk has sold 2% in today's block. So the disclosures could be important, but that's on Bajaj Electricals. The second stock is M&M. Within the auto names, this is one stock, we're seeing some bit of buying interest back. The volumes are on the higher side today. The cash delivery marking would be quite high as well. And I believe some, FI buying seems to be back in M&M, and hence that stock is at day's high today. The third stock is NTPC. Now, if you look at this stock in the last 1 month, the stock is down 4%. Despite some upgrades as well, the stock has relatively underperformed the PSU basket. And one of the reasons is one of the leading domestic insurance company who owns a large chunk is a big seller, and hence that stock has been under pressure of late, and that's been the case in today's trading as well. And the last stock is AMI Organics. This is going to be interesting. There is a board meeting scheduled today for fundraising, and I believe some large marquee names are going to participate in terms of investing into this company. I was looking at a shareholding pattern, very concentrated, just 3% is with the institutions, 1.5% with mutual fund, and close to 1.5% with FI. So who all puts in money will be important, but I guess because ahead of the board meeting, that stock is buzzing in anticipation of some strong names coming in the fundraising today.
Nimesh, just to clarify, that's Lakshmi Organics, right?
That's Lakshmi Organics, yeah, correct, Nigel.
Okay, all right. Thanks a lot. So let's get that stock up on the screen. It's up close to around 7%. That's the one that Nimesh is talking about. Well, let's get Midesh Thakkar back with us. Midesh, at around 3:15 odd, what's the trade you have for us?
Nigel, BDSC and Jindal Steel. The metal pack has done really well today. So this is BDSC with a stop at 575, with targets of 590, and Infosys after that bounce back post result day is again getting into a negative zone. So we'll take a STBT with a very tight stop at about 1241 and a target of 1210 on the downside.
Okay. Those were some BTST trading ideas. Let's address one more stock. AU Small Finance Bank has got the RBI Authorized Dealer Category 1 license. Abhishek is here to explain what this license means for RBL Bank and what it can do now. Abhishek, what services can it provide now?
Well, as you mentioned, AU Small Finance Bank has got the AD1 license, which is Authorized Dealer Category 1 license. So this license allows the bank to deal in foreign exchanges. License will allow bank to serve the needs of their importers and exporters who are the customers of the bank. And also it will provide inward and outward remittance as well. The move also will put the bank almost in par with, universal banks in terms of product offerings. Almost about 90% of the product offerings that Universal Bank does, AU Small Finance Bank can do. So the step is also closer towards getting a universal banking license, and analysts do say that this can add about 35 to 50 basis points to pre-tax ROA from the extra PSL sell down, that is priority sector lending sell down. The move is very good given the fact that last week we had RBI extending the term of the MD of AU Small Finance Bank by 3 years. This coupled with the AD1 license does indicate that RBI is comfortable with the recent growth trajectory seen in the bank. Remember that for Q4 business pro forma, we saw loan growth tapering down to about 26% level from 38% that they had in Q3. So good point for AU Small Finance Bank towards becoming a universal bank license possibly in the future. Back to you.
Thank you very much for that. One of the big numbers that we will be tracking post-market as today will be Tata Communications. Now, it's expected to be a stable, modest kind of a quarter. A revenue growth 1% on a quarter-on-quarter basis at 4,575. EBITDA margins are seen down 80 basis points to 23%, with the EBITDA number coming in at about 1,051 crore. But the stock, remember, has already seen a correction prior to the numbers. This week itself, it's down close to about 6% in trade, and in today's fall, it's also breached the 200-day moving average. So if the numbers are not so bad, the positioning in the stock is fairly bearish going into the numbers. In the numbers, the focus is always going to be on the data business. There is some nervousness going into the numbers because 50% of their data revenues comes from the export market, the international market, where the fear is that the macro uncertainty could start impacting growth for Tata Communications. But remember, they have a very strong order book up until now, which they couldn't execute because of the supply side situation, chip shortage. So at least for this quarter and maybe for one more quarter, the revenue numbers will look pretty intact because they will be executing on the existing order book. The question is going to be on fresh order wins. They never give you a number in terms of order wins, but qualitatively you will get a sense of what the pipeline is looking like and whether the macro uncertainty is going to be is hurting Tata Communication. But broadly on the numbers, expected to be fairly stable. But remember, the stock has already gone into the earnings with a correction of close to about 6%. Let's welcome Mayuresh Joshi, Head of Equity Research at William O'Neill, on the show now. Mayuresh, afternoon, and thanks so much for joining in. Is Tata Communication a stock that you like and or a stock that you avoid? And if you could tell us what your thesis is.
Afternoon, Rima. No, absolutely. I think a majority chunk of the business comes in from the data part. And the expectation is that the execution, at least on the top line, as you rightly mentioned, should probably continue. The kind of increases that you've seen in the past few quarters, specifically when it comes to the OPEX part, I think that remains pretty elevated. And therefore, I think the margin compression might be something which might still continue as far as this quarter's numbers are concerned. The third element, obviously, is the kind of CAPEX plans that they have got. And obviously, I think the data center business also is something where I think the management comments are going to be extremely critical going forward in terms of revenue visibility. Last but not the least, I think what probably happens in terms of management commentary, specifically in the key markets that they are probably serving at this point of time. So we do not foresee any kind of slowdown, specifically when it comes to discretionary spending on the data side of the business, even from a global level. I think there might be some uncertainties in terms of some pushback of orders that can probably happen in terms of the order book, specifically the export order book. Therefore, I think maintaining a neutral view at this point of time, keenly look at numbers, specifically the commentary on all these aspects.
Okay, got that. By the way, Zomato was in the news today as well. Mangalam was telling us earlier that with respect to Blinkit, there's a small change in the payout structure to delivery partners. Stock's still up about 2% thereabouts. Mayuresh, hi, afternoon. Any interest in Zomato? You're not talking about ordering food, but ordering the stock for your portfolio, if at all?
No, I think it's really going to be a matter in terms of how they're probably expected to post numbers, and largely numbers will do all the talking for all these stocks under consideration. Yes, we've been hearing a lot of news elements in terms of a lot of layoffs that have probably happened, which is impacting a lot of their deliveries. And it's not just Zomato, I think it's for the entire food delivery business chain itself. And therefore, I think we probably foresee that from an earnings perspective and from a strong earnings quadrant perspective, looking at numbers, again, where the consensus probably is very uniform, capital goods, infra, certain auto ancillaries, they might be pockets to probably look at. So no, I think not really having the optimistic columns of Zomato, at least at this point.
Okay, all right. And I think, besides the other news flows, we'll be waiting for the shareholding pattern of Zomato to come out. Some buzz that maybe there could be some prominent names that turn up. So let's see whether or not that does happen. By the way, we're getting the Q4 update coming from Prestige Estates. And boy, isn't it looking good. The sales are higher and total sales are up a close to around 19%. So a thumbs up on that one. I think the stock has taken off up to the high point of the day. Step into a short break, you come back, we'll continue discussing a whole host of stocks and we'll wind down the markets as well. Welcome back. Well, as we speak, a couple of these sugar stocks actually are moving higher. Mayuresh, any view on them? Balrampur Chini, that stock has moved to the high point of the day. What's your view on the sugar stocks and any pick from there?
Afternoon, Nigel. So absolutely, I think if you look at the sugar prices globally, I think they have hit their peaks, Nigel, at this point of time. Large expectations that the Brazilian output might be muted at this point of time. Expecting again, from an Indian context, the total production numbers to be a little lower compared to the last sugar season itself. Consumption expected around 24-25 million tons, which means even with the carryover inventory of last year, the excess inventory this sugar season will be relatively lower. Now, two aspects here. One, I think hearing of some element of export cap that can probably come through on the sugar front. And second, I think all the political developments, a lot of state elections and general elections expected in March, April of next year. What happens in terms of the MSP and the FRP prices, whether they get capped, is something to be seen. The ethanol capacities are coming up for most sugar plants, I think, are in the positive direction. And therefore, on that count, specifically on the B-level ethanol that you're probably looking at 57, 58 rupees realization per liter, that incrementally adds to a lot of earnings with the added capacities coming through. Even with the sugar, I think the current prices that are going on and the underlying raw sugar prices as well will probably mean that the numbers will be relatively okayish on the sugar front itself. So yes, I think the momentum can probably continue with sugar, raw sugar prices probably hitting peaks at this juncture.
All right, momentum continues with the sugar space. In fact, sugar and rice, all things nice. That's the kind of moves that we're seeing there. But, you know, Mayuresh, I wanted your thoughts on the real estate space, mainly because as we were speaking, there were updates coming in from the fourth quarter from Prestige Estates. Total sales up 19% year on year, collections up 12%. A couple of their peers have done much better. Do you like any particular stock in this space? Do you like the space on the whole?
So, Nigel, as we speak, I'm in Bangalore at our head office, and I've been hearing a lot of news report in terms of how the real estate market is probably doing. Prestige, Sova being leaders in the Bangalore market and the South markets as well. I think the prices have gone sky high at this point of time, both for owned properties and the rentals as well. And therefore, the kind of numbers that even Sova posted, numbers that Prestige has posted at this point of time, seems to be a very, very encouraging trend. The other element in terms of elevated interest rates at this point of time, maybe a lot of fence sitters might not be entering the market at this juncture. But I think the interest that is probably there, as I speak with a lot of people and meeting a lot of investors as well, I think the buoyancy is probably there. The only aspect that probably needs to be seen is the slowdown in the IT sector, because a lot of these South-based companies rely heavily in terms of the IT sector as a whole. And any perceived slowdown might actually drag earnings for the first half of the next financial year. Having said that, I think a few stocks, including the likes of DLF, have been outliers, so the momentum can very well continue. But a few of these real estate ancillaries, stocks like KEI as an example, where the outlook shared by the management, both in terms of volume and price growth, looks very, very robust. The margin performance looks very reasonable as well going forward. And with input cost inflation happening, it probably seems that even the return ratios and the earnings growth should sustain. So I think both on the EPS and RS rating on our own lens, this ancillary stock also probably looks at it.
Mayuresh, thank you very much for joining in and for your time this Wednesday afternoon. Wrapping up today's trade, and it's turned out to be another very listless, range-bound trading session. The Nifty went down to levels of 17,580. That was the low that the markets had hit even earlier this week, but it managed to respect that and finally close above 17,600, going with a minor downtick of about 1/4 of a percentage point on the benchmark indices. The mid-cap performance is a bit more disappointing. The mid-caps were holding up in the green, but by the end of trade, they're ending with a cut of close to about 0.1, 0.2%. So a sharper fall coming through for the mid-caps from the day's high. To quickly run you through some of the big movers on the way down, IT under pressure, HCL Tech down 2.5% across the board. You're seeing weakness. IndusInd Bank losing in trade, HDFC Life weak. In the pharmaceutical pack, Divi's Laboratory sees buying, but Cipla sees selling, so that's under pressure. And State Bank of India weakening in trade. On the gaining side, oil and gas, particularly BPCL, had a late surge and finally ends as the top Nifty gainer. BPCL up 2.25%. Bajaj Auto, M&M, Eicher Motors in the automotive pack, two-wheelers, four-wheelers combined. HDFC Bank, Axis Bank batting for the bulls in the private sector financials, and Divi's Laboratory continues to be the star and hogging the spotlight on the gaining side.
Indeed, the pharma stocks, they have come back, and they've come back in style. Gland Pharma, that stock was up and about, was up close to around 15%. You had Pyramid Pharma as well, the stock that's close to a third of what it was at the peak. That stock, in fact, did spike up in trade. And a couple of other notable movers as well has been Auto Pharma, which has already seen a big recovery from the lows. Lakshmi Organics, has Nimesh alerted us that they're going to be considering a fundraising, so that stock was up close to around 8%. Bajaj Electricals, well, earlier today there was a large trade. We'll come to know the parties later in the day, but it appears there is a bit of a clean-out trade that took place, and that's where that as well was up close to around 3.5%. And Orient Cement, we had spoken to the management a couple of weeks or so ago, and from there the stock has gained close to around 15%. They've laid out aggressive growth plans from here on. Let's see them deliver that. Orient Cement up 2.5% odd. Survey.
I'm looking at rice, I'm looking at sugar, I'm looking at some of the hotel stocks. So basically, a lot of consumer names actually did well today. In particular, KRBL 12% on the upside, LT Foods about 8% on the higher side. Look at some of the sugar names like Bajaj Hindustan, 8% up on that stock. Big moves coming in on anticipation of higher global prices. Som Distilleries has started off their beer plant in Karnataka, 7% on that stock. I mentioned Balrampur should also mention some of the other names like Dhampur, Dwarikesh, etc. So sugar and rice really up and about. By the way, BEML Land, the entity that houses the land assets of BEML, is starting its journey on the street with a 5% drop on day one. So very stock-specific action in the market today. Mid-cap index not doing too much. Advanced decline ratio favoring the declines as we're closing out. The indices, no sign of any direction. Extremely range-bound in that very tight band.
Okay, with that, we're going to wrap on Closing Bell. But don't go anywhere. A detailed data analysis on the trading trends and an interesting chat with A. Balasubramaniam, chairman of AMFI, coming up on the other side of this short break.